The latest housing data is in for the month of May from Cotality, and I just want to run you through some numbers. First up, the value of property in Australia has now reached $12.6 trillion. What we're seeing a lot in the media at the moment is a lot of hype around the property market and prices crashing in a lot of quotes that are coming out of a lot of the headlines. You'll see in this headline, so national property values flatline. It's meant to sound like the property market's dead. It's on some sort of life support. We're going to have a look at Brisbane in a sec, which is our market. Nationally, we are seeing some falls in a few places, particularly Sydney and Melbourne. We've got to remember Melbourne in particular is a very different market to the rest of Australia. So let's take a look at Brisbane. So despite everything that's been going on the last few months, so we've got the war in Iran, we've had cost of living, we've had inflation going up, we have had until recently interest rates going up, and of course more recently the budget announcements. Absolutely no doubt the property market has slowed down, but it doesn't mean, at least in Queensland, that it's going backwards. So looking at property prices in Brisbane, just under a 1% rise in the last month. So the average property value in Brisbane is around about $1 million. For houses, a little bit higher, for units, a little bit lower, of course. So if you're looking at a house, say, of 1.2, 1.3, $1.5 million, that's a $10,000, $15,000 increase last month. Now, if we look at where in the market prices are rising, this is broken down by quartile. So the lowest 25% of properties by median value, the middle group, and then the highest 25%. So what we can see there, down at the affordability end, outer suburbs, places like Ipswich, up in the Moreton Bay region, Caboolture, etc., some of the regional areas, what we're seeing is property prices go up by 4.8% over the last quarter, so a lot higher than that average I mentioned a minute ago. And then in the top quarter of the market, so those more expensive homes and apartments, places like along the Strip on the Gold Coast, inner city Brisbane, for example, some of the more sought after expensive suburbs, they've gone up by 2.2% over the last quarter. Now, if you're talking about a $5 million house, that's still a pretty big rise when you think about it. Something that's getting a lot of press at the moment is a slowdown in auction rates. And look, my view is that Melbourne and Sydney are auction markets. Brisbane is very much less of an auction market. This one was looking at days on market, so includes both auctions and obviously properties that are sold as a normal sale, private treaty as it's called, comparing it to last year. So days on market in Brisbane in May this year have actually gone down by a day compared to May last year. That might surprise a lot of people. 20 days on market. Now you can see the rest of Australia there. Brisbane's the second lowest in the nation in terms of days on market. Perth is just crazy at 12 days. We are seeing those go out a little bit in the last few weeks. I expect that the June and July results will push that out a little bit more. But again, these don't match, the data doesn't match the doom and gloom headlines we're seeing everywhere. Last one I want to have a quick look at is the Brisbane market itself in terms of rental growth. So since the budget announcement, we've heard a lot of commentary in the media that rental prices are going to increase more significantly, much faster than they were before the budget announcement. Treasury are not very good at getting this right. Forecasts a $2 a week rise over the next 12 or so months. To be honest, that's a ridiculously low number. We think property prices are probably going to go up more around sort of 7 to 8 to 10% this year. We think that rental prices this year are probably going to go up by about a similar number. So if you're out there renting at the moment, hoping to save to get into the market, this budget, in our view, has not helped you because it is going to make the situation worse because rental supply is going to get tighter and landlords are going to look to increase their yields to compensate for the changes in tax policy.